June 15th, 2017, not too far after we'd raised our seed round, I walk in on a Thursday and I get fired by my co-founder and by this investor that we took money from. I walked out of the boardroom and I went and grabbed my bag and I went to the mall. Like, I didn't know what to do. I was like, what do I do? Maybe I wasn't the right guy to be leading that company. I just felt lost because I was like, how did I not see the signs of this coming?
I have this core belief, and that is that success leaves clues. Every successful founder leaves behind a trail of decisions and hard-earned lessons that you can follow. On this show, I am hunting for these clues and piecing together what makes great software companies work. This mission is what led me to Cody Barbo. He's the founder and CEO of Trust and Will, a SaaS company with a 9-figure valuation focused on an IPO. They got there through a wild journey of starting off B2C, adding a B2B component, and literally changing laws around the country to unlock explosive growth. I'm Johnny Page, and welcome to a new episode of Titans of SaaS. There are two types of entrepreneurs in this world. First, you've got the entrepreneur who was born to create, the kid selling trinkets to their classmates, challenging the status quo from day one, always looking for the angle to give them the step up above the rest. And then there's type 2, the entrepreneur who kind of falls into business almost by accident, who finds a problem, decides to solve it, and only years later really understands what they were signing up for. Today's guest, Cody Barbo, is the former. He was born to create, so immediately after graduating college, Cody jumped into his first startup.
My first startup out of school, I didn't have a job. I went straight into startups. We were trying to build the future of social media, kind of at the inception of Facebook opening up to all. It's like 2011 through 2013. There was a moment, I think it was fall of 2013 when Facebook tried to buy Snapchat and they said no. And they went on to have a monster IPO many years later that like 100 copycats popped up. And we decided to call it quits. Like I took a selfie that day. It was like a very like moody day. I'm like walking down the street. I'm like, why are we doing this? It's like a waste of our time. I'd personally put in a good chunk of my money doing it. And there's just better opportunities out there. I knew it for Ethan and for myself. I went and worked at a fine dining restaurant, made actually pretty good money. And that's actually what led me to my second startup industry, which was kind of a LinkedIn for hospitality. And I'd co-founded it with a friend from college who was a manager of a restaurant. I was working in fine dining. And we wanted to help professionals like find a career path. And the number behind restaurants, I don't know if you ever worked in one yourself, but it's like 1 in 10 Americans, that is their career. And we felt the need to help these professionals advance in their career. That you could go from dishwasher to head chef. You could go from a host to a manager, or from bartender to bar owner. And we sold an applicant tracking system to these restaurants to basically help them identify better talent up front. So that business we actually raised millions of dollars for. So the reason why I share this in more detail is like we had some scale with the venture capital that we raised. We scaled the team to 25 people. We were servicing about a dozen markets, kind of on our path from raising that venture round to about $1 million run rate. And I share this story selectively because of a separation agreement I signed. But like June 15th, 2017, not too far after we'd raised our seed round, I walk in on a Thursday and I get fired by my co-founder and by this investor that we took money from. I walked out of the boardroom. There was the co-founder and the board member. And I went and grabbed my bag and I went to the mall. Like, I didn't know what to do. I was like, what do I do? Maybe I wasn't the right guy to be leading that company. But the opportunity to, be an outsider for the first time in almost 3.5, 4 years was really weird. I just felt lost because I was like, how did I not see the signs of this coming?
Being fired from your own company can be such a startling experience, the kind that leaves lasting scars and shifts not only how you see the world, but how you see yourself. But it's at this crossroad that we get our first glimpse into what I believe makes Cody different.
A month before I got closure, I wrote a LinkedIn blog post, which is still up today. That's just like, hey, here's the 10 moments I'm most proud of. Like, I knew I did nothing wrong. That's why I have like complete peace of mind. And I know that a lot of people will be listening to this, but I still have my coaster on my desk as my logo from our last company. So every day I'm reminded of how great that experience was, because when I started Trust Mill, it was like that muscle memory. Like it immediately kicked in so quick that when we started Trust Mill, I knew which corporate counsel to go to. I knew where to set up our bank accounts at the time. I knew how to get credit. I knew how to get corporate insurance. Like I knew who to recruit. I actually recruited 2 guys from my last company over to Trust and Will. And I knew the community, the startup community would rally behind me. So it was just weird because we were an early stage venture-backed company that like I wrote that LinkedIn post. The next day got picked up on the cover of the Business Journal, the newspaper. And it got a lot more exposure than I was expecting. And I never had been in that kind of scenario before in my life. But it's like, this is when you know who you are at your core. If you're a high integrity person with values and you've curated a great community around you, even in moments of crisis like that I went through, I had my friends coming to me immediately, like, how can I help? What intros can I make for you? And the startup community, once they found out I was working on something again with Daniel and Brian, it was like, go, go, go. And that's what got us off the ground so much.
So at this point, Cody is 5 years into his entrepreneurial career and he has 2 failed startups. For a lot of people, this would be enough to throw in the towel and just go get a normal job. But here's the wild truth about the game of entrepreneurship. Winners lose more than losers do. The success stories all have one thing in common: resilience. When we get back from the break, we'll unpack Cody's third act. What starts over a cup of coffee turns into a disrupted industry and a company destined to IPO. Let's take a moment to thank today's sponsor, SaaS Academy. Whether you are bootstrapped or venture-backed, growing a SaaS company is tough, but you don't have to do it alone. SaaS Academy helps founders unlock their company's full potential with expert coaching, proven playbooks, and a network of peers who have been in your shoes. From scaling your team to perfecting your pricing, SaaS Academy is going to give you the tools to win. So if you're ready to level up, check out saasacademy.com and find out how they can help you grow faster and smarter.
I meet up with Daniel in August of 2017 for coffee, and we start talking about crypto, and he talks about getting hit by a bus and what happens to your cryptocurrency. And I had some crypto at the time too. And I was like, I have no idea. Like, how does cryptocurrency pass if you die? And he knew that I was getting married a few months later. And I'd like never talked to my fiance seriously about like money, taxes, life insurance. I was 28 at the time. And I was like, man, we should probably get a will or an estate plan set up. And it's simple as that conversation was. Like, we talked about a whole bunch of other stuff too. That afternoon, I got a text from him. I still have it screenshotted. I should put it up on the wall. That little text led to another meetup and another meetup. And then for 2.5 months, every day in my apartment complex Clubhouse, we were trying to figure out, why is no one covering estate planning at scale? There isn't a TurboTax for estate planning. There isn't a leading data set around why majority of the country doesn't have this. And like, the bigger number that got us excited to want to actually pursue this is this looming wealth transfer, which today stands at over 100 trillion in assets passing between generations over the next 20 years, just in the United States alone. So we kind of ideated this to like, your typical, like, what's our initial go-to-market pitch if we were going to pitch investors? Timing was on our side because we entered the largest pitch competition in San Diego at the time called Quick Pitch. There's like movers and shakers in venture and angel investing and the operator entrepreneurial community and audience. And we took third place. We got a $5,000 check. And we had people in the audience come up to us after and say, hey, we want to use the product. We want to invest. We want you to apply to Techstars, one of the nation's leading tech accelerators, which we did and got accepted into. So within 2.5 weeks, we were incorporating the business. And within 6 months, we had raised $500,000. We had 5 people, including an estate attorney. And we had product and market to real customers by April of 2018. So like, it happened really quick. And I appreciated what I had learned in my previous 2 businesses to make that happen faster, despite it still being hard. But it was a really special time. And that is the true story of how Trust and Will got started.
At face value, it's not hard to see why the idea for Trust and Will got traction when they pitched it. TurboTax for estate planning seems pretty straightforward. But the elephant in the room here is that these are 3 co-founders with no background in legal. But that ends up being a real strength for Cody and his co-founders.
The 3 co-founders were not attorneys. And that was, to us, the biggest risk. We're like, could 3 non-attorneys start effectively like a legal technology company? I think that's why we had, a really hard time in the early days, but why we have the success today is that we never looked at it through the lens that an attorney does. We looked at it through the lens of our own personal lives. Because all 3 co-founders, we're all dads now. We have aging parents, and we've watched our friends and our family kind of have these positive life events of getting married and having kids and buying their first home. But also the reality is we've lost friends. We've had friends get divorced that are in their 20s and 30s now. Estate planning has some consistency across states, but it also has a lot of dissonance across every state. So it took us a full year to get just our last will and testament to majority of all states. I think we're in 48 states by the end of 2018. And then we raised our seed round. And then going into 2019, we did the trust just in California and Texas. And that's where we had started with the will, because that's where Dana, Brian, and I, we all went to college in California and Texas. So we just shamed our friends to being our first customers. But the trust was also another full year throughout 2019 to get that to all 50 states.
At this point, the first major hurdle for the product was cleared. Cody and his team had figured out a way to overcome their inexperience as attorneys to sell estate plans online. But the next major hurdle is a law mandating that all estate plans have to be physically signed and notarized, essentially prohibiting a tech company from selling and delivering a digital estate plan.
The other thing that was wild to us as entrepreneurs, and I've docu-signed, I think, every type of document in my life. When we started the business in 2017, you couldn't digitally sign an estate plan in any state, meaning you, even with Trust Mill today in states like California, you have to either print the documents at home or we have a beautiful package we'll ship out to the customer. You have to sign it, notarize it, have witnesses there. And if it's a trust, you got to get it funded. You got to go to the branch to retitle the accounts or do a deed transfer with the county. There's a lot of like mechanics that are just manual offline tasks. They're not hard. It's just more shit you have to go do to get these documents to be legally valid or to put the assets into the trust. So we're like, we'd caught wind. I had I've been with my wife for way too long to joke about this, about someone slid into my DMs. It was an entrepreneur. This guy, Pat Kinsell, from a company at the time was called Notarize.com, now called Proof. But they were catching wind of this regulatory change happening in the state of Nevada that was going to allow for digital e-will signature. So we're like, that's amazing. Let's go see if we can build this product experience together. So we took our product and their product, combined them, and had the first electronic will in US history ever signed, which maybe your listeners don't care about, but like it was transformative. Like it was the first time in US history that it ever happened. And we're like, this is the future. Like there is no paper trail. The estate plan is living and breathing. It's online through this platform. The way that the financial plan, I don't think anybody has a bindered financial plan anymore. It's all through these platforms now, through the FA or through a Wealthfront, et cetera. And we're like, this is the future of estate planning. So since then, we've lobbied 13 states to pass legislation. We've got bills going through Missouri, North Dakota, New York, and Virginia as we speak. And like, it's probably a reality in the next 2-3 years. Like we're spending hundreds of thousands of dollars a year to lobby these states to make this a win for all consumers. If you can DocuSign literally every other type of document in your life, why can't you do it with an estate plan? We basically reached out to our network, our friends, our family, from high school to college to just our community, our startup community in San Diego, as literally how we got our first 1,000 users to sign up on the platform. And in the first year, we had only raised that $500K. And even in 2018, we'd raised like a $2 million seed round. We were spending like 10 to 12K a month with 3 agencies. We had a micro influencer agency that was basically giving away a free will, paying the family $20. And then all we asked in return was like, hey, take a picture with your estate plan, which was a real estate plan for their family to protect their legacy. And we got all these diverse families from all over the United States, and they gave us visual content. We asked them to quote, what does legacy mean to you? So we got all this different copy to test. Then we had a digital marketing agency that was A/B testing Facebook and Instagram with lookalike audiences. That was super effective. And then we had an affiliate marketing agency for podcasters, bloggers, newsletters, anybody that talked about personal finance to try to get some sort of deal structure where it's like, hey, click this link, get 10% off your estate plan.
Cody, was this a tough sell to start? Because on one hand, you're using Instagram and Facebook, and you're selling a tech-first medium to getting an estate plan, but the people most likely to be on those platforms and to adopt this new way of setting up an estate plan are most likely millennials. And this is a point in time when millennials are, most of them, struggling to buy their first homes. They're strapped with a lot of student loans. What did you say to get people to move with a sense of urgency to actually set up an estate plan?
In the early days, kids, if you had minor children, this was very important to you. It's funny enough, like at our marketing spend now, we actually have a TV commercial that we just started advertising last month. The commercial is literally like young couple dropping off kids with grandma, grandpa to go on a trip for the first time. And we would notice this behavior back when I was in Google Analytics all the time, like on Thursday nights, like after 10 p.m., we'd see like 1 or 2 people on the website. And there was 5 of us on the team at the time. If they chatted in through intercom, it was myself, Daniel, Brian, Eric, or Patrick that were chatting back with them. And it was always like, we're going on a trip to Italy or to Hawaii or to Mexico or to the Bahamas without the kids. So what kind of transpired in that early year is that the photos with little kids and messaging or copy in those ads on Instagram and FB that were like guardians for your children, like guardianship for your kids, appoint legal guardians for your kids, like some variation of that, protect your legacy, protect your family. That was even a fundamental shift in our fundraising strategy. I was pitching a lot of young associates at some of the top venture capital firms that were super sharp and impressive people, but hadn't experienced life yet. And if I look at my 6 VCs that came in on our seed round, they're all parents with little kids. It was like, it took some creative thinking. I was like, maybe the same thing that works for our marketing would work for pitching investors. And it was like a fundamental shift in how we started pitching the business moving forward. That's where investors, they're like, great, you got to $1 million run rate. That's a big milestone to hit. How are you going to diversify your revenue mix away from D2C? Because this is, a lot of VCs will look at it as an empty fire pit of money and spend. So that's when the transition to B2B happens. So we hit the $1 million run rate. We ran a process in fall of 2019. We pitched 45 VCs over a 5-week period. This is like, again, pre-pandemic. We had to pitch everybody in person. So we're in New York and Boston, SF for a week, Silicon Valley for a week, and then a couple virtual meetings to follow. But we got 3 term sheets within a week. We took the kind of middle one that we liked the most. It was a new venture fund out of Boston, Cambridge area called Link Ventures. They came in with an investment. We had our first strategic investment as well that came into that round from a large bank. And that was the first like real playbook because we launched in 2020 a tool for financial advisors. So this is our expansion of revenue. We launched into our first major marquee banking partnership with Fifth Third Bank, one of the largest banks in the country. And we were like, oh, we need some early validations on like large broker dealers and RAs for the financial advisor tool. And then we need large banks to open up the partnership playbook that we want to run. And it's crazy that we draw back on these like 2 channel expansion opportunities in 2020. Like today, the majority of the revenue in the business is coming from these types of partners, from broker dealers, RAs. We're expanding even further into other professional categories. There's a couple things that really were important to us is that, these documents do have to be stress tested. The pandemic was like this wild card when it happened. So it was like 2 years in of operating the business for like, $700K in revenue in 2019. And then in 2020, when the pandemic hit, like people couldn't meet with their attorneys. Estate attorneys were only serving existing clients that were coming back to make updates. And they were literally doing these like parking lot meetings and parking lot signing ceremonies. Like this is real. So we had people coming to the website in droves. We had financial advisors start reaching out to us in droves. And that's actually when we launched our financial advisor tool and platform, which is a huge part of our business as they bring their clients to Trust Mill now. But the pandemic was like the first validator that like you can do this online and it's safe, secure, the same quality and integrity of documents you'd spend thousands of dollars doing with an attorney.
All right, so at this point, the product is in place, the funding is secured, they've signed 2 critical partners opening up the B2B side of the business, and the COVID pandemic is a massive accelerant to market adoption. So the question becomes, can Cody and his team capture this opportunity? Was this team built to scale?
When the pandemic hit in 2020, we were only 16 people. And we were in an office and like, I've been in leadership roles, for 15 plus years of my life, but never virtual. It was like, how do you lead a company virtually? Like it was a big change in how I lead, but the culture and the values I feel like were reinforced when we went through the pandemic, it like made what we do matter even more. And we were able as a team to come together. We gave away 11,000 free estate plans to healthcare workers and to teachers. My wife worked in healthcare. Daniel worked in healthcare. It was like, it hit close to home. And it made everybody, the 16 people that we were for 2020, super tight. Like you knew more about these people than probably even some of your close friends. Cause like, the challenges they're going through with their family or their people in their community that were impacted by COVID. So like it blended personal and professional into a melting pot. And we were relatively small through that year. I think we were 22 people by the end of 2020 when we raised our Series B. And then we went from 20 to 80 plus in 6 months. And that was like a transformative experience because then we operated a team of 80 without seeing anybody really for almost a year. And then we did a company summit in 2021 and we're like, oh, we built a real big company. And the revenue was taken off. That year we went from like 2.5 to 6 to 11 into 2022. And then we're basically doubling every year. And the team was staying flat. Once we got to 80, we kind of kept it flat roughly at 80 plus up until more recently. But it was just surreal. And the culture, I think every time we onboard somebody, we reinforce the mission, the vision, that what we call our values, we call core beliefs and actions. And I'm reminded almost every day of some version of our value stream. And I try to message that throughout the business and with the people that I engage with at the company.
Were there some growing pains as you guys went from 20 to 80 employees? That puts a lot of stress on the founders and the leadership team in place. Was it really simple or were there some growing pains throughout that process?
We had a great leadership team that I'll forever be grateful for. Many of them were with us for like literally OG first hires through 3, 4, 5 years into the business. And we had hit a ceiling with some of them. Not that they couldn't continue to grow with the business, but we had to hire above them with more experience. And it was The easiest way to characterize it is Daniel and I felt like we're playing the role of mom and dad, where if they didn't get their way with Daniel, they'd come to me. If they didn't get their way with me, they'd go to Daniel, and they'd almost wait for us to make a decision. And the only thing you can continue to do as a founder and operator, even at this stage of the journey for us, is like drive urgency and drive decision making. And we weren't getting urgency and we weren't getting decision making. And it's like, if you're the senior most person in product or engineering or ops, like make the call. I trust you. That's why they were still there. Just like continue to have faith in them until they couldn't make the decisions for themselves. They were relying on others or groupthink to make decisions. Not paying people $200,000 plus a year to let somebody else make decisions for them if they're the highest ranking in their department. So in a very uncomfortable transition, we had some execs come in above these folks, and we had others that we parted ways with to bring new execs in. Most of the executive team now is, again, like 20 to 30 years of experience in their career. They've worked at public companies. They've worked at companies with 9 figures of revenue. They still have to have that startup kind of resourcefulness because like we don't have infinite resources like a public company yet. But I felt the opportunity was like, if we bring people in who have they have a calm demeanor amongst the chaos that is building a company, like it creates a kind of a safety net for the rest of the team.
So Cody, in the time that we've spent together, it's obvious to me that your faith and your family and your health are all really important areas of your life. How do you integrate this all into one with such a demanding role as the CEO of Trust and Will?
I'm going to be the first one in the office every day, but I'll be the first person to leave because I need to like take care of myself first. And that's spending time with my significant other. And I'm an early riser, so like work out in the morning is kind of my default, but like at least have time to be a human being outside of work because I was working till 8, 9 o'clock at the previous company. And now that we have kids, it's like I feel like I'd Cinderella after midnight. Like at 5:30, I like shrivel back into like goofy dad where I'm like, I'm the chef, I'm cleaning, I'm helping my wife with laundry, I'm walking the dog, we're playing with the kids. And it's like corralling 2 kids into bath time, bedtime, and then trying to find like 5 minutes for my wife and I to like hold hands or like, do anything, cute and cuddly. And we're just usually exhausted by then. But, when I think the other lesson I learned is important for your listeners that are entrepreneurs is that your company is not your identity. Like I am heavily associated with Trust and Will the same way that I was with industry, my last business. But I feel much more peace of mind in this journey with Trust and Will that when I take this vest, I'm wearing a Trust and Will vest for the listeners, but like I wear company swag every day, that I can take this off like my jersey at the end of the day, at the end of the game or the end of the day for me, and just be Cody or be a dad, be a husband, be a neighbor. And it's not this work-life balance bullshit that some people preach. It's like a very intentional investment in self. Like I prioritize my sleep, I prioritize my workouts every morning, and I prioritize my family as best I can if I'm not traveling or not working.
So in the 8 years you've been doing this, you've overcome a lot. And I think for a lot of people, this would be the definition of success. You've built a company, you've scaled, you've got a great leadership team in place. But from what I understand, your goal is to take this business through an IPO. Tell me why that's important. What's your vision for taking this company public?
Yeah. I've always been like a free market capitalist, and I had a buddy from college who was a derivatives trader on the stock exchange floor. And I'm in New York. We're doing our Series A roadshow. And I get to go down on the stock exchange floor, which is way quieter than I thought. You just assume it's the people yelling and throwing shit everywhere. It was very calm, cool, collected, lots of screens. But, you got the CNBC booth there. So I got to see Kramer and Carl Quintanilla and David Faber. And then I look up and there's an IPO that day. It was a company called SolarWinds. There's probably 100 people on the floor. And I was just like literally in the pit with them. Not that I was an employee or any affiliation, but like got to watch the opening bell ring, this company go public. And you could see 15 plus years, I think, was from inception to their IPO of like hard work and effort materializing to liquidity for some. And like for sure the founders, like I think they maybe became billionaires. For some of the early employees, like, 8 to 9 figures of liquidity opportunity. And for everyday employees, they probably like hundreds of thousands to millions of revenue or millions of dollars of stock value in this like singular moment of time. It was unbelievable. So I have photos and videos of it that I reflect on often. I don't know how they're doing today, but it was like such a cool moment. And I remember going and telling Daniel, my co-founder, about it. And honestly, the team, I was like, we have to do this.
Cody, I don't have any numbers on this, but I know that it's pretty rare to have a startup CEO be the person who takes the company all the way through to being public. I mean, we could probably sit here and name these CEOs that have actually done that. And I'm curious for you, what keeps you pushing all the way through these different levels of the business when by most people's definition, you're successful? I mean, you could be set for life. You sell the company today. What keeps you so motivated and pushing for that next level.
We're getting to the size and scale where I feel very comfortable saying this. Like, if we sold the business today at our current valuation, set for life, would never need to work again. But it becomes less and less about that. On a very serious level, it becomes more about the opportunity. I'm like, if we were to sell early, we'd have a great outcome, and a lot of our shareholders and a lot of our team would make a lot of money, honestly. But if we were to sell early, like, we wouldn't have achieved the vision, and somebody else would probably come along and try to do it better than us. And if I didn't go back into estate planning again, which I probably would pick something else to work on, but like, if somebody else came along to try and do it, I just know I would be critiquing the shit out of this business where, like, they're not doing it right. They're shit on brand. Their go-to-market strategy is off. Like, I'd be like, we should have just kept going just to see how big it can get. And that's why I think I get pretty fired up every day. Like, even like, it's like end of day Friday for me that we're recording this. And I'm still excited after 5 days, two different travel trips this week, one to the Bay Area, one to San Diego, webinars, conferences, and meetings with the company yesterday, our company all hands, talking about AI for an hour with the team. And like, I love what we do. And I'm really proud to be building this company with our team, because it's like, there's no off button in business. And I think that's why I want to keep going.
How do you close the gap between who you are today, the skill sets that you have now, and who you need to become to take this company public?
I made it one of my goals this year, actually, to spend a lot more time with public company CEOs. So ironically, this morning I had a call that got rescheduled, but it was a founder CEO of a company who we share a mutual investor with. They're probably going to IPO this year or next year, hundreds of millions of revenue. And I just wanted to get his framework on, like, how are you thinking about your C-suite? How are you thinking about board dynamics? How are you thinking about your roadshow? How are you thinking about the banker selection process? And from a founder's perspective. Now, I have a CFO who's done this before, taking a company public and has a whole playbook to run. But like, for somebody who's a fellow operator a couple years ahead of us, and I'm doing this with probably a dozen entrepreneurs in my network. And these are folks that either are San Diego founders, where we started Trusted Mill, or we share mutual investors, or they're just companies that inspire me. And I've given them enough of a reason to like connect on LinkedIn, maybe get, 10 minutes of their time. And if we hit it off, maybe have a once or twice a year call. And all the difference between like pre-IPO'd CEOs that are like doing a couple $100 million, they're like me. They're still living in dreamland. They're very happy, optimistic. Recently IPO'd CEOs, the ones that went through like IPOs last 3-4 years, was like, they look like they came back for more. Like it's not glamorous, burdened by the shareholders, earnings season is like just you're underwater while trying to stay afloat. And, but they're extremely well compensated. So you kind of can balance, why you want to run a public company. But yeah, I've made a very proactive effort to curate a very specific list of CEOs that are recently IPO'd or pre-IPO that I can tap into for very specific questions and guidance.
All right, guys, it's time for our final segment called Success Leaves Clues. This is my chance to share with you the things that I learned from Cody, the things that I think made him successful and Trust and Will successful. And gosh, this was a really fun interview and story to tell. There's just so much to pull from Cody and Trust and Will. So let's dive into it. Today, I've got 5 success clues that I want to share with you. The first one is this focusing on the positive, right? Cody had this mindset, almost this unwavering belief early in his career as an entrepreneur that he was going to be successful. This showed up first in his willingness to set down the social media startup. I think someone operating at a little bit more scarcity mindset probably holds on to that opportunity a little bit longer, holds on to that business maybe a little bit longer than they should have. But he had this very conscious thought that, hey, I think I'm built for more. There's bigger opportunities for me and my co-founders to go be pursuing. Let's shut this down and get on to the next chapter at a time when he didn't know what the next thing was going to be. So this shows up again when he's fired from his second company, Industry, in the LinkedIn post that he writes, where he really spends time reinforcing what went well from that chapter, despite having actually been fired. Someone who could leave that chapter with a really sour taste in their mouth and distorted mindset on leadership and on the world and on and how he views himself. Cody really doubled down on it, and I think that it exposes this unwavering belief that he was going to be successful and that he was meant to build something incredible. Which leads me to success clue number 2, which is Cody's resilience. All throughout the first 5 years of his career, a lot of resilience in the company that he's building, and then certainly in the first several years of Trust and Will, to be someone that looks in the face of building a legal tech business without being an attorney, to, they're trying to move into a space where they can't even digitally sign documents. I mean, Cody has literally shifted the way parts of our society work in order to make room for trust and will to be the business that it is today. And you just don't do that without resilience. I shared this earlier in the episode, and I'll say it again. Winners lose more than losers do. And so if you want to be successful, just know that losing is a part of that journey. Every time we take a loss, it builds our experience. We learn lessons that you couldn't really learn any other way. And I think for Cody, he left those first 2 startups with a really great foundation in place, and his resilience set him up well to capture the opportunity in front of him at Trust and Will. So success clue number 3 has to do with the messaging of their actual product. And I mentioned this in a couple prior episodes, but there's oftentimes this linchpin moment when the entrepreneur, the founder, figures out a way to perfectly articulate the solution or the problem and the solution that they're selling. And Cody told the story early in the episode of noticing that traffic spiked on Thursday nights, and the way that he was going to get these tech first or tech forward millennials to actually value and purchase an estate plan, a last will and testament was by thinking of it through the lens of doing it for your kids. And when that messaging shifted, they reached their first $1 million in annual revenue. It changed the tone of how they pitch to investors. And really, I don't think that unless they figure that out, I don't think they capture the windfall that COVID really provided for them. So it's hard to overstate how important messaging was in the Trust and Will story. The 4th clue is this transition in the leadership team. You could hear in Cody's voice how tight he was with the original team of 16 people going through COVID and going through the early stage of business. I can testify to this myself. Like, you build a really tight bond with that founding team. And Cody's willingness to go out and hire a leadership team to make the hard decision that says, just because you are the person that helped get us here doesn't mean you're the person that's going to help get us where we want to go, and being willing to make those tough decisions. I think that if he's a little bit too late to do that, the business just doesn't capture all the momentum that COVID really provided. And so, I think as a founder and a CEO in Cody's role, incredibly critical to be able to evaluate objectively, do I have the right person in the right seat, and being willing to make that call. I think it set up Cody for success to where he's at today, which leads me to the 5th and final success clue, and that is Cody's network. From his co-founders to his first 1,000 clients to mentors, CEOs of public companies who are mentoring him through this process, Cody has got an extremely strong network. And it wasn't surprising to me at all that when I asked him about this, he actually has a very intentional framework for how he thinks about building his network.
People underestimate the power of their network and how much their network can give them an unfair advantage in getting their business off the ground. So my framework for this, I have a 5-year-old, so A, B, C, Ds, and E's. I'll use the alphabet here, but like your A's are your all-stars. Think of it as like your personal board of directors, the people that you spend the most time with, that you may work with. They might be in your family or you're married to them, but like they'll support you no matter what during your darkest times, but they also will call you out on your bullshit. And it's hard to hear that. It's tough love, but there's a very select few people that will actually be willing to call you out on your flaws and try to just shape you to a better person. Your B's are your business contacts, or I joke they're your besties, like people that like you could go 10 or 15 years without seeing, and like you get like one beer, or like one trip in, or you bump into them somewhere, and it's like the whole friendship comes full circle. That might be 100 to 200 people. And like those are sometimes the most, I was at Super Bowl a couple weeks ago, like saw a fraternity brother hadn't seen in a long time, random of all places, the Super Bowl. I was like, bro hug, like so stoked. How's life? How's family? Just a special moment, little things like that. Your C's are my favorite because a C is anybody you're connected with. It could be colleagues. It could be people you went to college with, anybody you're digitally connected with on LinkedIn or Twitter or Instagram, fill in the blank. But like even just the simple like Facebook feature, it's like, hey, it's Johnny's birthday, like wish him a happy birthday, or like life milestone or career milestone. Like take the 2 seconds out of your day, if you can, to wish them a happy birthday, congrats on the baby, congrats on the wedding, congrats on the promotion. Like it makes a huge impact. And it's always the C that will get you to an A or a B connection at like a company or for an opportunity or for whatever it is you need in life. And C's can very quickly become A's and B's. The D's, this is the hardest for a lot of younger people, myself included, is the deletes. You got to delete people from your life and network that are like holding you back. They're drowning you from your potential or from living a happier, more fulfilling life. And you don't have to like delete them from your contacts in your phone, but like just disassociate with them. And the E is everybody. It's just like this massive top of funnel of A through D's. But like I frame my network in my head, not in my contacts here or CSV like this, but when I meet people, I always assume good intent. Like if we're connected, we're now connected for life. And if I can be helpful, just always treat people with kindness and respect until they give me a reason to not, which sometimes happens. They fall into the D category after that. But I leave that with the listeners, because like life is too short. And if you have a way to kind of think about network connections, it's not always like a give, or it's not always a get, what do I get from people, but what can you give to people? And it's fine when you give to people, you'll get stuff in return that's almost, impossible to measure, but can change your life.
So to recap, the success clues that I took from today's episode are: 1, focusing on the positive, that winning mindset from day one, despite the opportunities right in front of you. Number 2, Cody's resilience, pushing through many obstacles along the way to ultimately build a super successful business. Number 3 is the refined messaging. Number 4, building that leadership team, not being slow to make the hard decision and put the right leaders in place. And number 5, the intentional emphasis on his network. Guys, if you enjoyed today's episode, I just got to say, it takes a ton of work to produce these. I love doing it. The team loves doing it. But if you are enjoying these episodes, my ask is that you subscribe to show us that you are enjoying the episodes. I'm not sure how long we'll keep on doing this. It's a big bet for me and the team. But if you're enjoying the content that we're making, please do me a favor, subscribe, and even shoot us a note. You can email me at jp@saasacademy.com and let me know if you're enjoying these episodes, to help keep me and the team going to produce these incredible stories. A huge thank you to Cody for sitting down with us. I spent over 90 minutes with him. If you want to get the full uncut, unedited interview, you can visit titanthesaas.com to get that. I'm your host, Johnny Page, and a special thank you to our guest, Cody Barbo, for sharing his story with us. Today's episode was sponsored by SaaS Academy. You can join thousands of founders who have scaled their companies using our proven systems and strategies. All you have to do is go to saasacademy.com to learn more. This episode was produced by Nicole Beaulieu, Devin Holmes, and Aiden Danzy. Until next time, stay curious.